Everybody, welcome back to the channel. In today's video, I'm going to share with you guys a stock that is about to make a massive move and why y'all should keep it in your watch list. We're going to address the overall market because today was FOMC day and we're going to look at everything. All right, we're going to discuss it in great detail so that y'all can get ready for tomorrow. Alright, y'all, let's dive right into the charts right off the bat. We have a lot to discuss. So, if you haven't watched yesterday's video, I strongly urge that you do. Because I gave y'all the play-by-play. And everything that I told y'all in that video came to pass today. Alright? Now, I told you guys if we got below 49.20 on the SPY, then we could go a lot lower. All right, and evidently this is what happened. It turned out that during the FOMC meeting, the Fed decided to leave the rates unchanged. All right, and looking at everything in the markets, like a lot of the large cap stocks, the way Apple was moving, how AMD and Nvidia were so high, we were bound for a pullback, and I was leaning bearish yesterday, and for tomorrow, I am going to lean bearish again. All right. So we broke below 49.20. Let's go on the 1 hour. Right. First, the bear trap. The next level to watch for is down here, that line. As you can see, the line from the previous ascending triangle, which we made money on, like, what is this, 2 weeks ago? Yeah, 2 weeks ago. That line. Watch for a continuation down to test the white line, which is now a red band, at exactly 48.40 tomorrow. I'm not bullish at all. Right? Let's check out the Dow Jones again. For those of y'all who listened to what I told you guys about not being greedy, right? Everything that I told you guys played out well. First and foremost, again, when the pattern does exactly what it's supposed to do, you're supposed to say thank you. And you're supposed to just take your money off the table, because this right there is almost always likely to happen. People who bought here took their money off at the close yesterday, all right? And if they held some runners, they definitely sold them today, this morning at the morning spike, right? It went above 385, right? And then it formed a bearish pennant that broke down a little bit early and then made a bull trap before the nasty sell-off. This one is also going to fall. We're going to look at the daily chart for the Dow Jones. That way y'all can actually get a good idea of why I'm leaning very bearish on it. The combination, I'm gonna clean up the chart now because again, we went over the lesson with the bullish pennant and why you have to take your money off the table when it gets to where it's supposed to go. Now, the combination of these two candles right there, all right, this is called a bearish engulfing candle. Look it up on Google. I don't have that browser pulled up right now. Just look it up. All right, you will see multiple examples. And the one that I want you to pay attention to are the pictures that have an uptrend followed by the bearish engulfing candle. All right, keyword bearish. And this thing, what usually happens after that is a candle that looks like that. Usually that's what happens after. So that's what I'm expecting for the Dow Jones. That's what I'm expecting for the SPY. And yeah, we look forward to tomorrow. The next thing that we have to look at is the VIX. And the VIX is moving quite well. Now, y'all remember when I told you about this triple bottom, about the neckline right here? Usually what happens, like I'm just gonna zoom back, like I'm gonna scroll left a little bit. It looks like a triple bottom, but at the same time, it actually looks like a bullish rectangle starting from like way over here. All right. And usually what happens from the bullish rectangle is the break of that neckline and a move all the way up to the alert right here at 16, maybe 1650. All right. So Watch the VIX for that as well. Panic will really kick in. Like panic would really kick into the market if we break above 15 bucks. All right, so keep your eyes out on that. Now the stock that is about to make a big move tomorrow. That stock is AFRM. All right. Now the reason why I want to share AFRM with y'all is because obviously it's overbought. It dropped initially to start off the year of 2024. And then it's been cooking sideways and playing games between $40 and $45. All right. It still has a whole lot of room at the bottom to drop. Also, earnings is coming up on the 8th, but I don't think we're in that week yet, so the contracts are not getting super inflated just yet. That might happen next week, but I think this week the contracts are fine, and plus tomorrow is Thursday, which is even better for the prices of the contracts. What I see here, I'm going to go on the 1 hour. I see a bearish pennant that actually broke down at the close right there, right? It broke down at the close, and usually what happens after that is a drop all the way down to 37 bucks. All right, so these are the two reasons. Number one, that bearish pennant. Number two is overbought, and there are gaps to fill way at the bottom. And it usually has these, like this has happened before, where it has these big ups and then these slow fade down that take months. And right now we are on the part where we slow fade down for months. All right, earnings might even accelerate the process. Like that little gap right here at what is this, 27? That's probably gonna get filled through earnings. Like earnings is gonna cause the stock to actually go down there. I wouldn't be surprised if earnings cause the stock to get down there. All right, that's what I want to say with this one, and why y'all should keep it on your watch list. Now, let's check out Apple, because Apple has earnings coming up. All right, and so far, yeah, Apple has been getting demolished for quite some time now. If you compare all of the indices with Apple, you can see which one is lagging and which one is not. All right. What's lagging are the indices. And Apple is way ahead of the curve. So Apple is already way, way, way down here. The indices are going to catch up. This one is going to fill the gap right here. There's a gap to fill, and it's filling it right now. It started filling today. There is a gap to fill at exactly 182, so there's still some room tomorrow. So Apple is going to drop a little bit, right? And then the indices are going to really, really fall just to catch up to that move. All right, it's happened before. Like this is, I think, the third time where one is ahead of the other, and I've shared it with you guys too in one of these videos where there was a lot of money to be made on Apple because the indices were ahead. But in this situation, it's the other way. The indices have a lot more room to make money versus Apple because Apple is ahead. All right. So that's the way that I look at it. I don't know how y'all look at it, but that's just how I interpret these things. All right. That's the trend that I've been seeing through my years trading in the market. Now, we're done with Apple. What's going to happen through earnings? I think it's gonna be an IV crush. I think it's going to be an IV crush on Thursday afternoon. I'm not too sure, but I'll make a video on it on Thursday nights just to see what we're dealing with. All right. Now, the other stock that I've mentioned yesterday was Google, and Google played out. It played out almost exactly as I told you guys it would. All right. Now, the only difference between my drawing from yesterday, this is what I drew yesterday as what I was seeing for today, right? I was seeing Google opening up at 142, and then testing the highs of 144.80, right? Just to fill that gap right here, and then closing the day at 140 because of the negative reaction from the FOMC. Again, I'm gonna pin that video right at the top right. That way I could go check it out. And the only difference is that it opened up a little bit higher at 144. It then flushed to 141 and slowly chopped sideways throughout like the whole day, right? So it opened up a little higher and then just faded, slowly faded, right? It has more room to fall. Will it play games? That's a maybe. All right, but this is a beginning of a big move down, just like Intel. So that's my thoughts on Google, and that is the end of the video. Again, do not forget to demolish the like button. As always, remember, I make these videos from Sunday to Thursday at exactly 10 p.m. Central Time, so definitely click on that subscribe button and click on that notification bell. That way YouTube notifies you whenever I release these videos. If you'd like to be part of a private Discord community where you can get all of this information in real time as I see them, including the contracts that I buy on the stocks that I choose to trade, and the reason why I take the trades to begin with. That way you can learn along the process. Like, you can find that as the first link in the description of the video below. Don't forget to follow me on social media at Paul Nguma and at Patternology Lab on Instagram and on X. And lastly, to get some free stocks with Webull, you can use the third link in the description of the video below. Once again, ladies and gentlemen, this is Patternology Lab, where we trade patterns and patterns only. And I will see all of you in tomorrow night's video.